I'm having issues with Thinkorswim. It's not showing Friday's data, and I don't know if this data is, I don't even know what we're doing. So, anyway, what, okay. So, the market, as I spoke about in the promotional emails, is at a key level here. And the market has had a nice run off of the lows. And a lot of people, pundits, gurus, and just normal folks like the Shoeshine Boys, right? The famous Shoeshine Boy story, are pretty well saying that's it. We're just going to go straight back up. The move in August was a blip. The move at the beginning of the year was a blip. We're just going to rocket ship much higher now. And we needed this. We needed to knock out the weak hands, all that good stuff. But the truth is that while this rally has been impressive, there's no denying it. There's no denying that the Bulls are have at least made a few stands here. First was down at the lows. Then there were pauses ahead of the 50-day break, pause right before the 200 break, pause at the 200 break. But now we are at a key level as far as Fibonacci retracements are concerned. Now, whether you are a believer in Fibonacci or think it's all voodoo, think it's self-fulfilling, I don't care. It's fine. Whatever you want to believe it is, other people watch it, and that means we have to watch it. I feel it's very valuable. I don't feel it exists in a vacuum. I don't feel that, okay, we're at Fibonacci levels, we have to reverse here. That's ridiculous. But I feel coupled with other tactics, other techniques, I think it can be extremely useful, just like moving averages, just like previous lows and highs, just like gaps, just like all that stuff. Just another reference level. So what I like to see, and I talked about this a bit in the Inner Circle mastermind session that we had before, that we have every week before the strategy session here, that I like to see a consolidation or a wind up before a break of either support or resistance. In this case, it would be resistance. So, like in the email I wrote, I said, I don't know, do we really have a better chance of going to the highs if, sooner if we paused here than if we just rip through it? And I believe that. I believe that if we pull back here, and it could just be a minor pullback, it could be something like this or like this, or if we paused or coiled here, we could build up some energy to bust through it. That I still believe to be the case here. Just like any other retracement. The other thing is, if you look at, and I don't know if Paul agrees or not, but I mean, it's kind of hard to argue it, that if you look at the bigger picture, we're still rallying from a lower low, and we still have not hit a higher high from whence that lower low came from. I don't know if whence is the right word, but I mean, you could call this high the high that it happened from, but even if you call just this high, because this high we basically rolled right over from there, we're still not above that. So we technically do not have a high. We have a lower low and not yet a higher high. We still have a lower high. So I know everybody wants to just dismiss going down again as an impossibility here, which is ridiculous. There's no such thing as an impossibility when it comes to the market. But I think that it's important that we are prepared, right? The positive out. What is it? The the positive result of negative preparation. I forget the right words. Anyway, it doesn't. It's irrelevant. Point is, it's real easy to just say, okay, every time it dips, just buy it. It worked for a while. But I don't know about you, but I've talked to plenty of traders that tried to do that last year and tried to do that at the beginning of this year and got knocked around and are now gun shy. I mean, Paul mentioned that a couple of weeks ago that his clients, a lot of them became gun shy from it. So it's really not as easy as just every single time there's a little bit of weakness to get back in. And I think that giving the benefit of the doubt that the market does move three ways actually, right? Up, down, and sideways, but let's call directionally, let's call vertically. It can move up and down. I think that has to continue to be respected here until we take out that high. Now, it's the probability, it may not be very great here that, it's a good probability we roll back over, but I don't think I mean, Paul, you may disagree, you probably do, but I don't think it's a foregone conclusion that we're ripping right to new highs from here. That's my opinion. But I hand it over to you, sir.
Okay. Good evening. Hope everyone's. If you're an NCAA basketball fan, this is Nirvana. Day 4 of Nirvana. 4 straight days of a constant stream of hoops. And what's amazing is on my bracket, I had Middle Tennessee State. No, I didn't. I had Michigan State losing in the second round. Sorry. Which I lost in the first round, which was great. I had Stephen F. Austin. I had Northern Iowa. I had one other big upset. I had 4 big upsets, and I was just totally rocking and rolling. The problem is I had Baylor winning 2 games, and Yale beat them. That hurt. And then I had California winning 2 games, and that really hurt because they lost. They got upset early. And I also had Indiana beating Kentucky. But I was all excited that after this weekend, I'm like right in the hunt. And I already found out my pool. I'm almost busted. I'm almost done because I took too many shots in the open round. But I love this. Is my favorite 4 days of the year, I think. Thursday, Friday, Saturday, Sunday. So if you're a basketball fan, you've definitely been in Nirvana. Who else lost that I picked? I can't remember. God. I forgot where I was yesterday, but I never forget names. And for the life of me, I couldn't remember Yoenis Cespedes' name, talking about the Mets, and I felt like an idiot. So I'm like on the side Googling, and I never forget this stuff. So now I know what my grandmother, who just turned 98, goes through when she forgets something, because I totally brain farted a couple of times. In any case, we come back. Another really nice week for the Bulls. I've been literally, as I'm sure you can imagine, been grinning ear to ear because right at the February lows, and you can go back to the archives or my website or my blog, and you can listen to it or read it. I pounded the table at the January lows, and I was even louder at the February lows. And I was dead spot on right. Now, I didn't see the magnitude at all of this decline, for full disclosure, but and right here, and there's no secrets to it. These two were relative. This one, February was easy because it was just a retest. Jan was a little more difficult, but this day was either the markets were ripping apart and we're going to collapse the next day, or we're going to bottom, which is what bottoms are normally all about. So usually what happens is you bottom. Once every 20 years, or 30 years, you rip apart and collapse, but you don't play those odds. I caught the tail end of what Tiny was saying regarding people not wanting to buy the dip, and that's one of the reasons I just felt so strongly that we were bottoming, was that in my 27 years in the business, I had never seen people call, email, and be generally freaked out about a 13% correction. It's like a joke. I have a couple of clients, especially my clients in Florida, who are just right on with me, telling me to take on more risk, do whatever it takes. Don't they didn't want to sell, which I had no intention of selling down at the bottom. So, but I had clients in towards Rhode Island, a group that were like, in the fetal position, sucking their thumb that the end of the world was here. Oh my gosh, we're going to zero. I never minimize people's feelings because they're very telling at future market behavior. I mean, almost the whole way up, this rally's been disavowed, hated, explained away, scoffed at. Every single juncture, I heard why it couldn't continue. And I think I mentioned this a couple of times. My old hedge fund boss used to tell me, in the strongest of trends, at the outset, you only get 2 to 3 days down. And I think we had this 4 times already. So now, looking at the Dow, we've closed the gap. We've done the Dow has done every single thing I've expected and I've asked. So for the first time really since the rally began in January or February, however you want to term it, I'm not as flat out bullish or going to the moon. I'm ecstatic at this melt up. I mean, this melt up gave the bears absolutely no chance to get in. Zero. So I don't think anybody listening to this call is that way, but I don't know what you do if you're a bear and you just got your face ripped off here. This has been a perfect mirror image, and the markets do this from time to time, a mirror image of this decline, and now it's a little bit stronger. So the normal reaction right now is a pause. And if I'm wrong, we continue higher, so be it. I've really enjoyed this rally. I mean, I've been essentially all in with a couple of periods where I've taken 10% off here and then try to put it back on, trying to be a little nimble, or you can even say a little greedy. But we've got through options expiration. I've got a trend that's post the Fed meeting that calls for some weakness, but I don't think the rally's over. The kind of breadth we saw, and you can see for yourself, there are no secrets. I mean, look at the AD line. I mean, this is unreal. I don't want to say unprecedented because I didn't do my homework, but this is from a multi-year low, rip your face right off, and look at this. This is a straight-up move in the AD line. That is not bear market activity. I'm sorry. That is not. This is, if we were down 20%, this is how new bull markets begin, with breadth like this. So here's a Dow. Again, we closed the gap, and we're right back into the previous trading range. Tiny pulled up Fibonacci stuff, which he's certainly a lot more of an expert. I'm not. I'm a lot less. I'm more of a novice. I don't like Fibonacci because some people just continue to redraw the grids. Tiny's not one of them. But so you get a grid like this, and the minute it begins to retrace, the fib guy was like, oh, okay, now we got to redraw it to this high, and then this high, and then this high. So it loses a lot of credibility with me. Tiny normally picks his highs and lows, the extremes, and sticks with them. I don't know enough about it. Clearly I can draw fib grids. Clearly I know what the math behind it is, but I've never relied on it to offer an educated opinion. It just doesn't work for me. So, oops, let me move something around. Okay. So there's the Dow. S&P almost the same. Dow's a touch stronger on a chart, but they're essentially the same. Right back into resistance. We filled the gap. We've essentially gone where we're supposed to go. Mid caps a little bit weaker because their high was way back last summer. Although in the short term they've been the real leader in the rally on a percentage basis from the low, but they've done nothing wrong at all. Small caps had a nice coil consolidation, and they busted out of it on Thursday. A little follow through on Friday. On a long-term chart, they're lagging the most, but they've had a phenomenal percentage run off of the February bottom. And the Qs are somewhere in between. They're definitely been pausing for a couple days, and I think the ultimate resolution is going to be a closing of this gap right here, if not flat out relative new highs up here. Delete some of these old lines out. Europe, I got to tell you, I still have no idea what to do with Europe. Here's the chart. I don't have a strong opinion. I apologize. When I do, you'll hear it. I just don't know how to make heads or tails out of it, so I won't. Emerging markets continue to be really good, but they haven't done anything that says, oh my gosh, new bull market, or oh my gosh, bear market continuing and we're going to fall over again. We've had a monster rally, 20%, we'll call it, but I don't have conviction whether this is a new bull market or we're in the context of a longer-term bear market. Okay. Let's see. I'll pull up a couple of. Here's China, nothing. Russia, ugly candle on Friday if it was real, and it was real. So Russia is certainly one that, if you wanted to stick your neck out and play a short, Russia would be one of them. Brazil, last week I thought Brazil was really going to come in hard after Tuesday. Wednesday we had a nice little reversal, and then Thursday and Friday we're back up again. So don't really have a strong opinion on Brazil. India, another one on my watch list that we missed. India breaking out nicely out of this little consolidation. Let's move on. Okay. Let me see if we have any questions, and I'm running into sectors. If you make a nice rounding top line for the S&P, yeah, Jason, I agree. S&P is right back into the middle of the range. Mike, I can't say I agree with you that the Russell is suggesting we break down. Unless I'm missing your comment, Mike. I don't see what on the Russell suggests we break down. We're just breaking out of a really nice consolidation, which should have some legs to it. So maybe I missed your comment. And the yen. Yeah. Okay. I'll move on. If you want to add some more comments, Mike, I'm happy to address. 4 key sectors. I'm just smiling ear to ear. Stocks, dynamite, and this is an old divergence. This was such an easy one. We talked about it in real time. What a beautiful divergence right at the low, and again, ripping of the face right off. 20% in a month. Beautiful, perfect rally, right into it. I mean, people say, well, would you buy them up here? No, I wouldn't buy them up here. We gave you plenty of time, weeks to buy them at the lows. Would I buy the stocks up here? For me, no shot. Discretionary, same thing. Another beautiful divergence right at the lows. And now, not as strong as the stock, but certainly it looks like the S&P or the Dow. Would I buy these up here? No, I would not. The trannies, which we talked about right near the bottom so many times that everyone and their mother was saying these were done, this long-term bear market began, blah, blah, blah. I mean, look at the action. This is accelerating to the upside. Look at the last 3 days. And FedEx came out with earnings. Although I personally would never own FedEx into earnings or any stock if I can help it. It was a nice pattern into earnings, and then boom, blow out to the upside. So the trannies on a weekly basis. So you've got what looks like a 1 year plus, let's call it a whatever. We had called it a 1 year plus bear market. You go from essentially 165 on the IYT to 115, huge decline, real bear market, and now we've had a phenomenal rally to the upside. Would I buy it up here? Nope, I would not. I think the time to buy this stuff was down in here, especially here, or at the February lows here. And finally, the banks. The banks look decent. This looks nice, but price-wise, they're really lagging. They just cannot get a catalyst, and the Fed cut their forecast that they're going to raise rates probably June and December of this year, which is not great for the banks. It's not as bad as it would be if they said we're not going to raise rates at all. I just don't know what to do with this. The chart itself looks like it wants to go higher, but they're a laggard. So I look at a couple of the big three. Wells Fargo, does it look amazing? No, it looks fine. I wouldn't mind being long Wells Fargo. Here's Citibank, kind of the same thing. No problem being long Citi. JP Morgan's always been my favorite, and I think it looks fine. PNC looks like the rest of them. I mean, they look fine to me. And maybe I'll miss out, and that's okay as well. I just cannot wrap my arms around what the heck the banks are up to. Let's see. So those are the 4 key sectors. They all look fine. What a far cry from the collapse. Let's go through. Okay. IGV, I talked about it last week. Had a beautiful consolidation, broke out, and now we're running. Looks like a lot of other sectors. IOIZ. This is a bad tick up here, so you can ignore this candle. Telecom still looks good. Diversified financials, clearly stronger than the banks, but not a leading sector. Retail, very extended, but has done nothing wrong. Look at the home builders. Boom. Another big, huge move. So if you're picking this up already, the theme has been huge move. They've done everything we talked about and expected and forecast, and now they're right back into the areas where they should likely stop within a few percent of here. So before anybody asks, would I throw in and commit fresh money this week? I wouldn't. I can't, because I'll probably lose. But I'd be back to buying into weakness if it comes. Industrials, wow. All I can say is wow, look at this. And the key was the February bottom was so much higher than the January bottom. Materials, almost equally as good. I'm with a couple of stocks for a second, which is more Tiny's gig than mine. Nanotechnology. Yeah, GE's not done. So you guys who like widows and orphan stocks, GE, at least from my views, got a whole nother leg higher coming. Boeing. Garbage. Honeywell. Wow, look at Honeywell. Wow. Oh boy, did I miss this one. Jeez. Here, this is one of your Dow leaders. Wow, what a nice move. All-time highs in Honeywell. Got rid of the takeover with United Technology. Now we're at all-time highs at 112. Wow. Hate when I miss these. All right. Energy. Energy looks fine still. You know, very volatile. A lot more risk than the others, but energy still, on a percentage basis, is the leading sector. I'd probably like OIH into a pullback better than XLE. I think you can define your risk easier in OIH. Healthcare, I kept saying, what do you do with this? It won't get off its rear end. I mean, healthcare and IBB, to generalize, I keep saying it's. I mean, I'm sure there's a couple of stocks in each that look good, but overall, the sectors I have a very tough time getting excited about. Internet sector still looks okay, lagging the cues. The time to step up, I own this for full disclosure. That's because I owned it all the way down too. The time to step up is now. If this doesn't begin to break out and at least get the 200-day, but I think it should go higher, then I think gravity takes over and you're going to have some significant underperformance. Airlines, they look good. God, what nice, again, I should have saved all these. What nice divergences at the lows. God. And you couldn't have scripted it any better than this year. Defensive sectors, REITs, boom. Oops, let me dial down a little bit so you can get a better perspective of REITs. There we go. REITs above all the congestion that the market's going into right now, right above it. I mean, clearly you wouldn't buy them up here. They're buying the pullback. Staples, all-time highs on Thursday. And utilities, not all-time high. It looks like all-time highs, but they have another, I think, 10% to go. So here's your all-time high line. I'm wrong. You got a couple, 4% left to all-time highs, which I do think they'll be hitting. I own Staples and I own utilities, and I would buy more on a pullback. So you pretty much have broad-based, across-the-board leadership and participation. I mean, so all those people who were talking about this new bear market, how do you have any credibility left sticking on the bear market side when all these sectors have behaved so well? Let me think, did I miss it? Oh, and gold. Gold has gotten very, very volatile of late, which I've mentioned for 3 weeks now, and it's still very, very volatile. I have a tough time buying it up here. I'd much rather look to buy up the GDX below 19, which on one of these pullbacks, it'll be below 19 pretty quickly. All right, let me pause and see if we have any questions. Jay, would you put JNK in the same camp as the Dow? Has done everything you would expect, now not as bullish. Absolutely. You know, let me go to the real JNK chart because it has that big dividend. So here's the PIMCO High Yield Fund. I mean, it's had a monster rally off the lows for high yield. I still own JNK for full disclosure. But this has been some for junk. A 10% move off the low is historic. Very enjoyable, I might add. I didn't think it would go like this, frankly, but it has. But Jay, I agree with you. And you have a little reversal on Friday. It's done everything we've expected and asked, but now it's no ways. I would definitely not buy junk at 35, 40, 34, 54. I think you got to wait for a pullback and see how it pulls back. But I agree with you 100%. Johanna, same strong feelings for Norway. N-O-R. Johanna, I can always leave it to you to give me a ETF that I forget about. Yeah, I mean, Norway looks like Europe. They look very similar. I don't have an opinion. I don't know what to make of it. Frankly, I'm surprised Norway is not lagging more because they've had to sell several or tens of billions, if not over $100 billion in their sovereign wealth fund because oil has collapsed. So not sure what to do with Norway. Would you be a seller of call credit spreads on the indices now? Mr. The VIX is today. Wow. I'd have no problem being a short-term seller of call credit spreads. VIX is down so low. I don't think the market's going to accelerate, Jay, and then run to the upside, so I'd have no problem with that. Define your risk. Make sure that if I'm wrong or we're wrong, you can't lose a lot, and go from there. Jason, what do I think about the divergence in gold and then EWZ for Jan? Jan, EWZ, I did not see this move on Thursday and Friday. I thought EWZ would pull back a little more than it did. So I don't know, frankly, right here what I said frankly a lot tonight. I don't know what to make of this the last month here, less than a month, last couple of weeks. So I'd say my opinion is neutral. And gold and the GDX are similar. You got much more volatility in the last 2 weeks than you've had in a while. Sentiment on gold is pretty bullish. Doesn't mean it has to reverse right away. Smart money is bearish. If I had to buy gold, I'd wait for some kind of pullback of maybe $50 or so and watch how it behaved. Now you have a divergence. There's your divergence. So I wouldn't run and jump into this. I'd wait. Tanker plays, I can honestly tell you, there's a tanker ETF that if somebody gives me the name of it, I'll look at it. But the individual stocks, I have never, ever looked at them, I don't think. Okay. So we'll forge ahead. We just covered gold. Silver looks kind of similar to gold. I mean, smart money is really, really short silver. I don't really have an opinion on it. The dollar I have not changed my opinion. This was the seminal day for me, and I'm not ready to call the end of the decline. We get through another quarter or so, maybe we put in a intermediate term low in the dollar, but I'm not ready to call for new highs yet. The euro doesn't look as bad as doesn't look as good as the dollar looks bad, but I don't think it's done going up. I still hate the euro long term. The yen is very stubbornly hanging on. You've now got smart money back to being net short. and the BOJ is going to come out with more stimulus. But I got to give the bulls a lot of credit because in the face of huge headwinds, they refuse to give up. And if you were just looking at the chart, you'd say, boy, this is a really nice rounded bottom. You've got some initiation here, momentum, you're consolidating, and you'd say the next move, just from the chart, is higher. So this is the chart fighting against the BOJ. This will be a really interesting one to play. I still think long term, the FXY is going sub 50. FXC, the rally's finally pausing. And the pound, nothing. I think the pound's this is going down 40%. I think before 2020. So I don't love this at all. But up here, no opinion. Let's see. We did currencies. We did come up. We did gold. TLT, which I still own, is staying in this downwardly sloping pattern. That's about it. I can't make any other comments because I don't have any. Junk bonds we did. The AD line we did. Crude oil. Wow. So I said I hate big red candles at bottoms. Hate them, hate them, hate them, hate them. But you can't ignore the double bottom that was here. So for a couple months I said, was this the low? I don't know. I don't have conviction because we have two red candles. You just can't ignore the potential of it. So now you've got a 60% rally in oil. Again, would I want to buy oil tomorrow? Me? No way. You just went up 60% in a month. And the rally started right when all the forecasts were like oil's going to 18 and 17 and 15. Some were even $9 a barrel. But now we're at 40? No. I'd wait for a pullback if I wanted to get long. Natty gas has been really, really frustrating. I do not. Smart money is long. I thought this was the beginning of the real move, and then it failed. And then I talked about it again the day of the low. This could be another beginning. We had a really nice rally for 2 weeks. What do I think now? I don't really have an opinion. I'd say neutral. Copper coming into last week looked like a nice little consolidation pattern, and Thursday it tried to break out. Friday it did break out, and then we came right back into the range. I don't like that. That makes it much harder for me. So I don't know. I'd like to see the bulls come right back in and take over. But if the bears could close below, I don't know, 219, then I'd probably say you got a good shot at a short position taking you down another 5%. That's copper. Let's see. Look at questions, and I'm going to finish up with all the ags. Okay, Tom, thank you for. Oh, it's C. Good. That's a good one. So the shipping one, wow, just decimated. Yeesh. Oh my God. 23. I mean, this is all got to be a play on the emerging markets. 23 down to 9 and change. So whomever asked the question about the shipping companies, it doesn't look like they're done going up. So it looks like higher prices are coming. But like most of the others, I'd probably, if I wanted to buy them, I'd wait for a pullback. Wheat, absolutely no opinion. Pair of twos, neutral. Corn, pretty much neutral as well. I mean, gun to my head, I'd play both wheat and corn on the long side along with soybeans, but they're pretty neutral. Sugar, wow. I thought we'd have another chance to look at sugar on the short side, but momentum's just been too strong. There's been no solid reversals, and I would not want to play this to the long side. So once again, I'll take the neutral side. Cotton now. This is, you have almost record amounts of smart money being long cotton, and it started to get going before Friday, and then Friday just kind of whacked you over the head. I think you got to play cotton to the long side until proven otherwise. Until we close below this low, I think cotton deserves to be played long. Cocoa, I didn't have an opinion going into this week. I don't have an opinion now. We're just kind of retracing this elevator shaft decline. So into the 200-day moving average, we reversed on Friday. I don't really have an opinion on cocoa. Coffee, will it ever go up? As it tried last week, 2 weeks ago. Oh my gosh. So before we get too excited, so here's, we talked about last week. Was this the start of the rally? I said I don't really think so. We had a couple more days higher, but let's go down and dial this down. So could this last 2-3 weeks have been it? Possible, but I'm not going to get excited yet. I'd rather see it run and then pause and see how it paused. This has been a year-long trading range in coffee. Okay, let's see. What do you think would be the catalyst for a higher dollar? Yellen mentioned the higher dollar being concerned, which I think dropped it a bit after the Fed. James, good question. I am terrible with figuring out a catalyst before it's apparent to the masses. So in early 08, I turned long-term bullish on the dollar. Right as the Fed was well before they were going to start printing money. I'm not good with figuring out why it's going to go up before it goes up. I'm decent with saying it's going to go up before it goes up. My kind of grand plan scheme thesis is that the dollar is going to go up because they're going to continue to debase every foreign currency, probably on earth, except maybe the Aussie dollar. So there'll be a huge flight to quality, huge flight in the U.S. dollars over the next 3 or 4 years. But what will be the next catalyst to get it moving? I don't know. Can't. Maybe it's some better economic numbers. Man, that's kind of what the masses would say. There's definitely something else. I just don't know what it's going to be. But I do feel very confident the dollar is going much higher. Oh, and Johanna asked for the Aussie dollar. Here you go, Johanna. And like FXC, it's had a wonderful move, but I don't want to get short right now, and I certainly don't want to hop on the long side. It's too high, too extended for me. So I just stand aside and watch if and when it pulled back. Do you think the franc or British pound will stay strong long term? Adine, absolutely not. I think the pound is going to parity. Here's the pound. I think when all said and done, let me go to the monthly chart. I think when all said and done, it's going to go from 142 right now to 100 or lower, which will make the whole decline from 07 more than 50%. So I think long-term the pound is going much lower. I think we're going to double this decline as soon as it falls out of bed. And we could rally, for a couple of quarters or so back to 150 and then roll right back over to towards 100. And here's a Swiss franc. Let me look at it, which I rarely look at. So, yeah, the Swissie's tougher for me. because while Europe is a disaster, but the Swiss kind of beat to their own drum. So I'm not sure I have a strong opinion here, Adine, but on the pound I do. Okay. Any other questions, comments, concerns, quibbles, queries? Mark, Tesla is more of a thing for tiny. I'm only doing individual stocks. I'm not smart enough. That's above my pay grade. Vin on tech, it looks like it wants to go higher. I'll use Qs as a proxy. Well, they're consolidating under the 200-day moving average, and it looks like they want to jump up from the 107 and change and close its gap up by 112. If the market pulls back first, clearly these will pull back as well. But I'm keeping a close eye on the Qs, and that's my proxy for tech. So I think they're going higher. Let's see. Mike. My recap is I think we're extended in the short term. There's enough evidence that says we should pause to digest, if not pull back right now. I don't think the rally's over. I think we got higher highs coming, but the easiest money clearly has been made, and this is the first week where I'm not coming into the new week jumping for joy as a bull, but I am still bullish. Any thought on any of the Asian currency options, Johanna? Absolutely no opinion. I've not looked at them, so it'd be a lie if I gave you one. Mark, the Canadian dollar has had a phenomenal rally. It's bounced back really nicely, but it's at a point where it's way too, for my blood, way too rich to buy up here. But there's no reversal sign for a short yet. John, stock market valuation. I would say it's fair. The market's at somewhat equilibrium, maybe fair value with a tiny bit under. I do not think stocks are overvalued. But it's really that's it's irrelevant what I think. You got to watch how markets react to things because overvalued and undervalued can get more and more and more and more so, depending on what kind of regime or environment you're in. Other questions, comments, concerns as we wrap up. Went to the UConn women's game yesterday. I think that it was early on. It was like 61-4. So that was kind of interesting. And the first time I went, UConn was an old agricultural school. So my daughter kept begging me to take her to. They have the homemade ice cream store on campus. So we hit up the UConn Dairy Bar, and it was good. I had this Husky vanilla ice cream with Reese's cups in it and chocolate chips and something else. I put hot fudge on it and some Nestle's Crunch. That was really good. Tomorrow night, UConn women again, except it's a 9 o'clock game and it's an hour and 15 minutes away, so I'm not thrilled to be going up with my kids that late on a weeknight. Let's see. Thanks, Jay. I appreciate that. I always like compliments. But if you have any complaints, you can lodge them as well. I always address everybody. But thank you, Jay. That's very nice of you. All right, last call. So between now and next time we get together, the UConn women will have beaten Duquesne tomorrow night, and they will have played their first game in Bridgeport next Saturday afternoon. If all goes well, we'll play 3 games the next week and head to the Final Four. If it doesn't go well, we won't, and I will have wasted money on plane tickets. All right, everybody have a great week, and we will talk to you next Sunday night. Bye-bye.